Well, hello again, Solis family. Greg Solis here with our market update. First of all, on the family front, there are some updates. Jack is officially gone. He's in Louisiana, if you could believe that, playing in the so-called All-Pro Tour. It's a mini tour that follows the Corn Ferry. He's real excited because he'll be playing in the Monday qualifiers to try to get on the Corn Ferry event. If he doesn't make it, then he's got a 4-day tournament, a pro event that he'll be able to play. So he's basically gone now for the next 3 to 4 months. So excited for him. He's just pumped up. He's living his dream. So that's a real exciting time for Jack. Nicole got a new job. She's working at Duke's now. She'd been working at a surf shack for the last year or so in Waikiki, and now she's working at Duke's right there on Waikiki Beach, and she couldn't be happier. And school's going well. She's a little tougher now that they're in class, but she's doing well. So proud of her. And then Emily changed jobs. She was at a local sushi bar, a sushi restaurant here called Okura. She's now working at Palmer's Restaurant. She loves it. A little more nice restaurant, and it seems to be a well-ran organization. So she's learning a lot and growing and doing well in school. So proud of Emily as well. So Monica and I are doing well. Everything's moving along nicely. Been a little challenging, obviously, watching what's going on in Ukraine. This has been a very difficult thing, I think, for Americans to sit back and watch. It feels very difficult to see this kind of unfold on TV. It's just a tragedy, and our prayers and thoughts go out to those people in Ukraine. Obviously, it's shaken up the markets a little bit. Kind of tough coming right out of the COVID pandemic and dealing with all that, and we go straight into a war in Europe, and it's been very, very challenging for the markets. We were already dealing with the supply chain issues from COVID, and that's why we were seeing inflation kind of rear up a bit. And now with the war with the invasion, we're seeing, of course, oil prices go up. Oil prices going up is not a good thing for inflation. It's one of the worst things that we could be dealing with to try to contain inflation. So it makes things a little more complicated. The numbers just came out year over year. Inflation was up 7.9%. We haven't seen inflation that high since 1982. So pretty brutal time. We're still of the opinion that when some of these supply chain issues and supply and demand disequilibriums kind of settle down a bit, we feel that inflation will start to kind of top out here and hopefully go back down to that 3 to 4% range. But we would love to see this ordeal in Russia kind of calm down a bit. That would certainly be helpful. So that's caused the markets to really be quite volatile. We've seen the NASDAQ drop over 20%. So that's bear market territory. So the NASDAQ officially went into a bear market. The S&P 500 dropped by about 13%, peak to trough. So it's been a very challenging time for the equity markets with what's gone on. The good news is, if you look back at the history of the markets, anytime we get a 10% or more correction, 92% of the time we get a pretty strong recovery. Now, past performance is never a guarantee of future performance, but that typically is what happens. We still feel the economy's pretty strong. GDP numbers still look good. Corporate earnings are good. There's still a lot of cash sitting on the sidelines. Still a lot of pent-up demand. But there's a lot of headwinds now. It's a little tougher right now. So we're a little more cautious on where we might be as far as 2022 and 2023 is concerned. But we still feel that there's a strong possibility of a strong rally after this pullback that we've seen. So there's a lot to work out, and it's a challenging time, but no, rest assured, behind the scenes, we're doing some rebalancing of the portfolios. We're trying to position those allocations properly. We're a little more optimistic with the domestic equities than foreign equities right now. We think that Europe's going to struggle a little bit more than America, so we're making some adjustments for that. But overall, we've held up very well, all things considered, with how brutal it's been out there. Because we even had interest rates going up as well. When interest rates go up, the value of high quality bonds goes down. So we're dealing with that as well. But overall, everything's positioned nicely. If you have questions or concerns, give us a buzz. But hang on tight. Volatility, there's going to be a lot of volatility. But we're cautiously optimistic that hopefully we're trying to find a bottom in here, and we'll start to recover in the equity markets here pretty soon. But call us if you need us. My best to you and your family. God bless. Bye-bye.